What made you get into real estate?
Okay, so what made me get into real estate I had a tough period in college. I went to college for about a year. Had an issue when it came down to financial reasons. At the time, I was working at Target like part-time overnight and stuff like that. So my mom, she ended up moving us out here to Connecticut right after high school. She had a property out here. Um, uh, had six bedroom house. So what I ended up doing while I was in college was I ended up renting out those bedrooms for $550 a month for each one of the bedrooms. I knew absolutely nothing about real estate whatsoever. I hardly knew what I was doing. And I remember when I was screening tenants, a lot of tenants was like, "How old are you?" Mind you, at the time, I'm only 18 years old. So I had no clue what the heck I was doing. But the money was pretty good. I'm not gonna lie to
you. You $550 each, and you said
yeah,
you lived in one, so you're at least getting what's that, $2,500, $3,000 a month?
Yeah, give or take. It was about $2,500 because I stayed in one. So it was pretty good, especially for 18 years old. The mortgage on the place was $1,500.
So your mom didn't even have to worry. You was covering the whole mortgage.
Yeah, it was covering the mortgage.
And still walking away with a piece of change while working at Target.
Little bit of money. Can't complain.
A lot of people watching this right now, this is their first time really diving deep into real estate like that. So can you start that from the beginning and take your time with it? I want them to really understand it.
Okay, so I purchased this property as a owner-occupied property. It was a HUD-owned property. So because I was owner-occupied, I get first dibs on the property. The biggest problem was I wasn't able to use FHA on this property. Why? Because my FHA was already tied up on another property at the time, which was my 203K. So I had to go conventional. Even if your FHA is tied up, you can still use an owner-occupied conventional. It'll be anywhere from 3.5 to 5%. So even so, the only difference would be your debt to income ratio. Which Malcolm can touch on that a little bit.
Yeah, they're a lot more stricter when it comes to conventional loans. So your DTI has to be a lot tighter and your credit score has to be higher. That's why a lot of times we say, hey, start with FHA, use that for 3.5 because they have a higher DTI, which means you can have more debt and the bank will allow you to still get the loan. Versus conventional, they expect you to have a lot less debt and have a higher credit rate. So the higher your credit score is, the lower the interest rate the bank is going to give you because it shows that, hey, I take care of my credit. So that bank is rewarding you for having better credit.
Correct. So I had a fairly high credit score to begin with. So it worked in my favor to go conventional, especially since I purchased multifamily properties first. That added on to my income. So my debt to income ratio was just that much better. So that's why I was able to go conventional owner occupied. So I went conventional owner occupied. I knew what the comps were going to be in the area by running comparative market analysis. I had my realtor ask me for it. And then I renovated the property knowing what I was going to be able to pull out for equity. Then I was going to be able to use that equity to purchase more properties.
Ooh.
Yeah.
So not only did you figure out house hacking, you also did what a lot of people fail to do. They leave equity in a house, but equity in a house doesn't give you anything. You can't do anything with equity. It looks good on paper, but it's not buying you more real estate.
Correct.
So tell us, how did you figure out how to get the equity out and how to use that money to play around and do other things and look at other real estate?
So this property that I'm in currently right now, the equity is actually still within this property. So I'm going to go through the, as you know, I spoke with you probably about a month ago about the refinance process going towards this property here. I already refinanced my other properties. So I can take the story back to my very first house.
Let's do it. Rewinding time. That's my
all right. So some people know the story, some people don't. So my very very first property, I decided to buy that property because me and my wife now, my wife now, we were
shout out
living.
To Marisha.
Yep. Thank you. I appreciate it. For those who don't know, I just got married. But okay, I was living in Bridgeport on Connecticut Ave area, And so my car kept getting vandalized. And at one point, they took the tires, everything from under my car, all gone, left my car, not even on center blocks, just right on the asphalt. So at that point, I was like, yo, I'm out of here. I'm not renting here no more. I'm gone. We were paying $800. We were paying $800 a month in rent. We were living on a third floor. We were living on a third floor apartment. And it was a friend of mine. So he gave us like a really, really good deal.
Okay.
At $800 for a 2-bedroom, which typically in the area probably went for around $1,100 or $1,200. So he gave us a really good deal. But with everything going on, I was like, you know what? I'm gone. Can't do that anymore. Ended up moving back into my mom's house for 6 months.
Okay. Short period.
Short period of time. Well, the plan was 6 months. Better yet, the plan was for 6 months while I stacked some money aside to purchase my first property. You're
still working at Target right now, right?
No, at this point, I started working actually at my career in communications.
Okay.
So I was working. It was currently now Frontier, but it was AT&T back at the time.
Okay.
Okay. So I'm currently working there. I'm at my mom's house. I'm putting money aside, saving up some money. I'm still looking for properties. And what really got my head spinning was I went through a lot of towns offer some free. A lot of towns, a lot of cities. I'm not sure where everyone is, but a lot of cities offer free programs. So I went to a program called Bridgeport Neighborhood Trust. And it's a free program for people who want to buy properties pretty much anywhere. It's free FHA courses. It's free property managing or landlord courses. It's all free. And they just give you advice. They run your credit score. And it's kind of like the SBA, to be honest.
So they help you get ready for a mortgage.
They help you get ready for a mortgage by lining you up with lenders, realtors. They take you through the 8-hour class. They figure out where you are and what you got to save, the things you got to cut out before you can save up for a mortgage.
I need to create my own course because that's exactly what I take my clients on.
No, it's awesome.
Exactly.
It's awesome. Yeah, so they were going through all my stuff and they're like, hey, you got to cut out the food. You're spending around $450 a month in just like food going out. So I'm like, all right, let me stop that. And then just stopping the rent just made things that much better. Mm-hmm. So that's $450. I stopped that. And then adding another $800 onto it made it easier to save. So I was in my mom's house in one room. Maisha was in a room with me eating ramen noodles. That's all I ate. All I ate. Ramen noodles.
You know, Gary V had a similar thing. He said, I think for 8-10 years, he said all he did was keep his head down and eat. He said dog, but that's what it is. He was grinding. When you have a vision and when you're on a mission, a lot of times all that fanciness, it doesn't do anything to you because you know, like, I have a bigger picture. I have a purpose now. And your purpose was to get out and get a house. So whatever you had to do every day, it just reminded you, hey, I'm working on a purpose and I'm walking in faith.
Yep, that was the plan. So I kept looking for a property on MLS and everything. As you know, I expected to find something right away. It took a long time. I did not think the process took that long. It took a long time just to even find something that I like. House after house after house. Put an offer. Sometimes I lost the property because I wouldn't go up high enough. Because I kind of had an idea of a budget. I think my budget at the time was $170 or $180 or something like that. So it's not that high, but I ended up going up into the area of Connecticut called the Valley.
Okay.
Which is for those of you that aren't in Connecticut, Shelton, Derby, Ansonia, Oxford, like all that area, where the property values are cheaper, the taxes are cheaper. Some people don't like the Valley, some people do. So I actually so happen to like the Valley a lot.
Of course, you will end up buying a house there.
Yeah. So
now, if you're watching on YouTube, please, Xavier is willing to answer all questions about this topic. We are going to do more videos, so do not worry, do not fret. Just let us know what you want him to, if you have any questions, and we'll touch on some of them. Not all of them, because I don't want it to lead into the next episode or the next section that we're going to shoot together. But if you listen to the podcast, make sure you follow Xavier, Nate's Management. And if you're listening, I appreciate the support, but you got to come on Friday to watch it live so you can have your questions answered. And if you're watching it live, the podcast is available so you can re-listen to it again. You see how it works? Either way, you got to listen to this information more than once. Thank you for watching this video. If you enjoyed it, like, comment, subscribe. If you're interested in learning more about real estate or mortgages, check out the other videos on my channel.